Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 28th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data here in the United States, as goes for a normal Monday. Hope everybody had a great Thanksgiving weekend and are ready to roll for this week because we have a lot of economic data coming out throughout the week going forward. We got a lot of CPI numbers across the pond. Here in the United States, we have Fed governors speaking throughout the week, mostly on Tuesday. Then on Wednesday, we basically have some GDP numbers coming out across the pond. Here in the United States, we get core PCE index, personal spending and consumption, personal income, Chicago PMI on Wednesday. And then on Thursday, we have, on Wednesday, we also have crude oil inventories, which would be a big one, and OPEC meetings, which I think are going to be a bit of a fail because Saudi Arabia is not even looking to come to the table, as a lot of people haven't started holding back on any of the sanctions of producing, so it doesn't look like they're going to be doing anything going there. And then later on in the week, we also have some more Fed governors speaking on Friday, so keep that out there. We also have the non-farm payroll on Friday because that is the first Friday of the month, so those will pretty much be the catalyst to move the markets this week, and so it could end up being a pretty busy week with vehicle sales, the whole 9 yards. Anyway, on to the overall markets. As you can see here, crude oil overnight was actually looking like it was going to be a negative day for the most part, but when the markets opened up and started heading into the open for the most part, that's when we started getting a little bit of a push to the upside. And then as you can see here, up $1 on the day, trading 47.06. So the bulls came out in force. I think that that's a little overdone to the upside, just because I don't think OPEC is going to have this meeting, or it's just not going to be a substantial meeting, and there's not going to be anything that comes out of it. So I think that the glut of oil coming out of the Middle East and here in the United States, because we have rig counts up across the board, fracking going at full steam, so not quite full steam, but it's ramping up too. But the oil market to me seems a little overdone to the upside. On to gold futures /GC. As you can see, this is a pretty good pattern now. If we can hold this near the highs, close near the highs of where we are now, it's going to look a lot better for a bottoming pattern. If it sells off anymore and even closes below yesterday or Friday's open, as you can see, Friday's open came down, rallied back, but if we can stay above that open, it's going to look pretty good. Otherwise, it's going to look like a continuation pattern to the downside. These are the kind of candlesticks I really like to look for, and if you can get confirmation to the upside, that's a really good thing for a change in direction. So hopefully that might work out. Then on to the bonds. Bonds up. We're just up a point on the day when I got ready to start this off. As the overall equity markets are down, the bonds are pushing to the upside. Dow Jones, as you can see, down 51 points, but it is not one of the leaders to the downside. It's only down like 0.28%, but down 53 points on the day. NASDAQ is about the same in percentage terms, or was just a little bit ago, down 5 points on the day. Pretty much a quiet day, as there's no economic data, nobody really talking today, so the overall markets are just kind of drifting to the downside. It's not anything major to look for, I don't think. Maybe even just a breather after making the historical high settlements and stuff like that in the E-mini S&Ps on Friday. Not a whole lot of volume on that Friday, so that gave the bulls a little bit of easy movement to the upside and settled really close to the highs of the day. But the E-mini S&P is giving back a little bit today and probably are the leader to the downside. Now, this is interesting because when I was getting ready to go on here, the market was trading down below here, but we've moved into a new time bracket and have settled back above this value area low, which would be an indication for some bulls to come out and for a day trade buy this and look to cover maybe half of it at the point of control and then the other half when it touches this value area high. But it's an intraday trade. If it settles or it comes down and settles below this value area low, you would exit that trade. But just a quick one for the people that like to trade futures intraday. On to some trades that I've done. This is Aetna, and ticker symbol is AET. Just decided to do this because this is another one of those candlesticks that I love to look for. When you get a top and a 52-week high, you get this doji right here, which is like a spinning top doji, and then the market confirms to the downside. That's like a green light for a trade to a reversal of trend. So I decided to go in here in Aetna and sell a call spread. So I went into the January and I sold the 135 calls, and then I bought the 140 calls to define that risk, and I collected $1.31 for that. Now that's right in lockstep with my rules around selling a call spread. It has high implied volatility. It's above 50, and you can check out my webinars on that where I go really into the details as to how to set something up like that. But I decided topping pattern with this one on the charts with the high implied volatility was a green light for a bearish trade in Aetna. On to the next trade that I did today, which was MYL. Now they're the EpiPen manufacturer. They've had a lot of bad press out there on the EpiPens. I think most of that is behind us. They're going to start working with the government and trying to lower some of the costs of those. So I think that they've worked that out. That should give them a little bit of bottoming anyway. I think the worst is behind them going forward. So decided to add a little long deltas with this one, and also went into the January and sold the 33 puts and then bought the 30 puts to define that and collected 31 cents for that trade. So it's not exactly right in line with my rules on that one, but I decided I wanted to get a little bit wider on that to keep my credit, so I could see a little bit of a push to the upside there. So that's what I did in MYL. That's about all I got for you guys today. Go to protraderstrategies.com. You can find out how I set up all these rules around these trades, and it will increase your probabilities of success going forward. I even talk about how it will increase those probabilities of success. So check that out. Go to protraderstrategies.com. And if you can't take that, take it easy.